Are you a small business owner looking to cash in on the success of your business and hopefully sell it for millions? Well, if so, this video is for you. In today's video, we're going to talk about the 5 biggest mistakes small business owners make when trying to sell their business. Hey everybody, welcome to my channel. I am your host, Landaverde, business broker and commercial lender, help you either buy or sell a profitable business. If you are a small business owner looking to cash in on the success of your business or want to buy one of your competitors, you're probably in the right place. And I'm going to encourage you to subscribe to my channel. And don't forget to hit the bell and you'll be notified every Thursday when a new video comes out. Mistake number 1, poor record keeping and accounting. Now, if you didn't watch my video from last week, it's a 35-minute video when I go into great detail as to why the importance of having good record keeping and why it matters if you're selling your business. I'm not gonna say that same thing all over again here. I encourage you to watch that video because the link will be up here, and it will be down as well. Please look and watch that video because I spend a lot of time putting the content together. Now, what I would say is that the 2 things that actually affects you the most as a potential seller is being behind on your tax returns and being behind on your interim financials. So I would say, let me rephrase it. If you are behind in your internally generated financials, you probably are going to be behind in your tax returns. Now, it's okay to have extensions, but if you're looking to sell your business, if you haven't filed your 2020 and we are in 2022, there's something wrong. If you haven't filed your 2021 and you have them on extension, the lender or anybody who is going to validate your financials is going to make a note of that and making sure that you do have an extension indeed. So, but just nothing can kill your deal faster than having sloppy bookkeeping. You know, I have taught courses with the SBA with their Thrive program, and I did this whole 8-hour video course with a CPA fellow, a colleague of mine, and then we actually went deep as to what are the red flags for anybody looking to raise capital when they're actually looking to raise capital and have to leverage their financials. Well, it's even more important when you're trying to sell your business. So poor record keeping is like not reconciling your books on a monthly basis, not being able to tie your source documents of all your bank statements, your credit card statements, your loan statements, or anything that you get a statement on tied to the balance sheet. Because if you can't do that, well, those numbers are not real. And if they're not real internally, how are you going to be able to file tax returns? Now, I got a news flash for you. Your CPA firm will, if you look at the engagement letter of any CPA you work with, they're gonna say that they're actually filing tax returns based on information that you gave them. So if there is something wrong, it'll be you failed to give it to them and they will absolve their liability. So you are ultimately responsible for the information that you give to your CPAs, that it gets filed with the IRS and your local state franchise tax board. I'm in California, so it's the franchise tax board and the IRS that they're getting your corporate tax returns. This is a really big deal. So poor record keeping is the number 1 mistake I see most business owners, and I would say you need to kind of get your house in order, file everything up to date. You should only have the current year and really do your best to making sure that, hey, you are profitable. Because if you're not profitable, you're not going to be able to sell your business. So that's number 1. Number 2 mistake I see small business owners is having unrealistic business valuation expectation, or basically a false sense of what your business is worth. Now, I'll tell you this and I'll work backwards. Your business is only worth what the market is willing to pay. Your business is only worth what somebody else is willing to pay. Beauty is truly in the eyes of the beholder when it comes to buying and selling businesses. You may think that your patent alone, you know, you have this awesome patent pending, type of technology that you use for your business, and that alone, that intellectual property, it's worth $1 million. So, and then you think, well, I'm doing about, it's definitely worth, at least 1.5 times revenue, and I'm doing $5 million a year, so it's probably worth at least $7.5 million. And then you have the $1 million and the patent, that's okay, so I should expect to collect $8.5 million, and any buyer is going to be willing to pay that. But that is the farthest thing from the truth. Yes, businesses can sell for multiples of revenue, but the smaller that you are, if you're in the business, if you're $5 million of revenue and less, between 1 and 5, rather the business valuations are going to be between, they're going to be based on seller discretionary earnings, or it could be EBITDA plus add backs from from the owners, basically the owner's expense being going to be add back to the P&L post earnings. So you're going to have that, and it's going to be anywhere from 1 to 5. And if you're between 0 and 1 million, it's going to be smaller than if you are between 1 and 5 million, and then if you are between 5 and 10 million. So this is our standards that are already set by hundreds, if not thousands of businesses that have been sold, that I have and we have as business brokers have access to. We know what the comps are. Think about it. When a business is sold, there is intelligence gathering for us. If you, for instance, if you own a construction company that is doing $10 million in revenue and is doing about 15 cents of the dollar, so it's pretty well run, $1.5 million on $10 million worth of revenue. And I know if another one sold, that I know how much it is, whether it's 3 times or 4 times cash flow. I will know what that is because we based our valuations on existing comps, businesses that have sold recently, no different than the real estate market. Okay, so you have to think. It would do you a big favor if you really took a sober look at your business and figure out, okay, well, have I been growing at a decent rate or ahead of my competitors the last few years? I know 2020 and 2021 are years we'd rather forget, COVID and post-COVID, so 20 and 21, but it was your business in 2019. How do your business compare in 2022 when it was in 2019? Are you growing or are you growing backwards? So you're going to be penalized as a business owner if your business is sliding backwards. Why would a buyer buy your business if your revenue is less than it was before? Unless there is some extraordinary reason why your business has lesser revenue, no buyer is going to want a business that is on a sliding back in revenue. Now, the only exception may be that you actually did as much net income with lesser revenue in this year that you did in 2019. So that's why you need to work with a competent professional that can value your business at a solid valuation that can be defensible. Because if you sell your business and your business doesn't measure up, you can have legal exposure because of that. So you have to really work with somebody who knows. So that is number 2 on realistic business valuation. Hey, I need a favor. And if this video is resonating with you, please like and comment on my video. So what it does is every time you interact with my channel and you like and comment, especially if you comment on my videos, what it does is the algorithm search for and looks for other viewers just like yourself who can benefit from the same content. So what you're doing is helping me out, spread the word to other people like-minded like yourself. So thank you so much for doing this. Mistake number 3. Not getting your business pre-qualified for an SBA loan. Now, true story, this is actually happening right now. I'm working with a couple of buyers who had interest in this particular businesses that they liked, and they're actually listed in the public domains. And I noticed that in the description, they didn't say anything about the business being pre-qualified for an SBA loan. So we contact the business broker or the listing agent representing the seller, and they said, well, we tried, we think it can be financed by an SBA lender, but they didn't know. So here's the problem. As I said before, and I've said this several times, that most likely if you're the seller, your buyer will be getting a loan 70% of the time, and it'll probably be an SBA loan. Why? Because it has the lowest down payment, 10%, and in some cases even less. So the SBA will guarantee up to 80% of the loan, and then the SBA lender is going to do a cash flow deal on you. So you better have the cash flow to support the debt load, and that's something that goes into the valuation. But not getting the business pre-qualified by an SBA lender is just not wise. If you are a seller, you need to have your business broker make sure that the business package, all the stuff that we talked about in the last week's video, is actually fully vetted with an SBA lender. And what you want to hear is, you know what? I would definitely fund this deal at 90% because the cash flow from your business, Mr. Seller, supports the valuation. Now, you don't want to be with the valuation so far apart that the SBA lender, you think that your business is worth $5 million and the SBA lender says, well, you can really only support a $3 million loan. So what about the gap? Who's going to make up that gap between 3 and 5 million? Because if the SBA lender is only going to give you a $3 million loan, that means the buyer is going to have to come up with $2 million out of pocket. Now, this would have to be an amazing business, and the buyer would have to have a team of investors, angel investors coming up to pony up the difference. It doesn't always happen. You're going to be dealing, unless you have a very successful business that can be bought by a private equity group or a strategic buyer. But the reality is that most businesses are not going to have that, unless your business has $1 million or more of EBITDA. It's going to be very, very hard to find a private equity buyer. You're going to have a pool of investors. And if you neglect to have your business validated by an SBA lender, you're going to be at a disadvantage, because if I am representing the buyer and you are the listing agent, you know that there's going to be a way out of the contract, out of the letter of intent, by not passing the SBA loan. So if you don't have the business qualified for an SBA loan, then there's no deal. The buyer gets to walk away from the deal, and you got to go back and put your business on the market. So hopefully that was clear enough. Mistake number 4, mentally checking yourself out during the sales process. So again, whenever you list your business for sale, assuming that everything is right on day one and your business, all your documents are in order, it will take 6 to 9 months to actually sell the business, to the fact that you walk away with your paycheck. You may be tied to the business a little bit for some consulting while there's the transition in between the new owner and you. But on average, it's going to take about 9 months. And you do not want to be in a situation that you cannot make it down the road because you're already mentally checked out. You don't show up to work, and the worst thing that can happen is revenue begins to decline, and you have you may have to get some seller carries, which means that you may have a note that you have to carry, because you may not have the entire loan financed by a lender, so you may have to carry a little bit of a note, and there'll be some clawback provisions on behalf from the buyer as attorney, legal team, that are gonna basically, if the revenue drops below a certain point, you're not gonna be able to get some of the money back that you actually are funding. So it's gonna be a discount on the sales price. So you do not want to check out. You want to make sure that you're fully operational, which I know it's gonna be very hard, because you're already excited, you're already counting your money, you see yourself in Waikiki, you see yourself at a beach, and you're traveling the world with all the money that you're gonna make, and then you neglect to take care of the business that's going to pay for it all. Bad mistake. Stay engaged. Try to separate yourself. Try to basically check your ego at the door and basically be engaged and be given. Have your heart fully committed to the business till the last day. That would be my best advice. Otherwise, it can cost you everything. All right. Last but not least, number 5, not obtaining proper guidance. Now, listen. I have a lot of respect for the small business owner. You work so hard to build your business for the last 10, 15, 20 years, maybe even longer. And you know your industry, you know your product, you know your market better than anybody else. But you're no CPA, you're not an attorney, and you're definitely not a business broker. There's an entire team of people that actually both representing the buyer and the seller that are involved in a transaction this size. And the bigger the transaction, the more people involved. You should pay your advisors what it's worth. You do not want to skimp on legal advice, tax advice, and valuation advice. And you should definitely work with a business broker. I'm not saying you should work with me, but you should work with someone who is going to be mentally engaged, who has the tools at the disposal, who can actually present you in the best possible way. As I said, we work with about 700 private equity groups. We know what they like. You need to know. And the hardest thing about selling a business is finding the buyer. We have the buyers. So do not be exercise wisdom by actually hiring, I'm a big fan of Jim Collins' Good to Great, the book, and he talks about, getting the right people on the bus, getting the right employers and the right vendors, the right customers on your bus that is going, riding into the sunset. I would actually add that it's the same thing when it comes to selling your business. You need to have the right advisors on your bus, and beyond that, sitting in the right places in the bus, guiding you to this exit strategy. You need to, you have to have your CPA, your attorney, and your business broker working in concert, as well as your wealth planner, your financial planner working in concert with the rest of the team to make sure that you have the most tax advantageous situation for you, that you have the most legally defensible positions should something happen, that you're not going to be caught in a situation that you're going to regret, that you're going to get the highest valuation possible that the market can bear. I'm not saying you should sell your business for the cheapest price, but there is a time when you say, you know what, I like to think my business is worth 10 million, but maybe it's only worth 7 million. But you know what? 7 million, if you can sell it in the next 30 days, what would that be worth to you? And assuming that you don't have a lot of debt load on your balance sheet, that your liabilities are little to none, what you have is equity. You are going to be selling the goodwill and the business that you created. So you got to get the proper advice, and you got to get the right advice at the right time. And I see a lot of business owners trying to sell the business on their own without all these people helping them. It's only going to spell disaster. So I hope this video was helpful to you. I hope I was candid enough. If you have any comments, please email me. Please, all my contact information is below, or you can also make a comment and I'll get back to you. And thank you so much for letting me share. For a limited time, I'm giving away my cash flow calculator. This very powerful but simple tool allows me to work with a buyer to see from the existing cash flow of a business how much net cash flow we're going to have after the debt service. If you're looking for something like that, figure out that this is probably a tool you need to have. You can just download it by clicking on the link below. And I also have another little gift for you. This is my personal financial statement template. This is an Excel sheet different than the SBA Form 413, where you actually have a PDF that you have to fill out. It doesn't allow you to do the checks and balances. Well, this little Excel tool does, and if you want to use it, it's better to prep it on the Excel tool, then eventually move it into the SBA form so you leave nothing weird in it. So those are my gifts to you. Please click on the links below, and they are yours to keep. Let me know how they work out.